How to understand industry financial statement nuances. Imagine trying to compare two different businesses in the same industry. You might notice their financial numbers look similar, but there are hidden details that tell you more. That's where understanding industry financial statement nuances comes in. It's like learning the language of each industry so you can see what really matters. When you look at financial statements, you're seeing a snapshot of a company's money situation. But each industry has its own way of using money and reporting it. For example, a manufacturing company might have large equipment costs, while a software firm invests heavily in research and development. Recognizing these differences helps you compare companies fairly. Start by knowing the main financial statements. The balance sheet shows what a company owns and owes at a specific moment. The income statement reveals how much money the company made and spent over a period. The statement of cash flows tracks actual cash coming in and going out, and the statement of shareholders, equity shows changes in ownership value. When analyzing these, use techniques like horizontal analysis, which compares numbers over different periods to spot trends. Vertical analysis compares each line item to total revenue to see how expenses and assets relate proportionally. Ratio analysis helps you understand profitability and liquidity, like looking at profit margins or current ratios. Now, each industry has its own financial patterns. For example, retail companies often have high inventory levels, so their inventory turnover ratio is key. Tech companies might spend a lot on research and development, which affects their expenses and profit margins. Understanding these industry-specific traits makes your analysis more accurate. It's also helpful to look at industry benchmarks, average ratios or financial ratios typical for that industry. Comparing a company's numbers to these benchmarks shows if it's performing well or lagging behind. As a student interested in investing, focus on how a company's financials reflected its growth potential and stability within its industry. Use online tools and financial databases to access real company reports. Practice analyzing these statements regularly to get better at spotting what's normal and what's unusual for that industry. Remember, a high profit margin in one industry might be average in another. So, always compare companies within the same field. When making investment decisions, consider how industry trends impact financials. For instance, if the industry is shifting towards sustainability, companies investing in green technology might show different expense patterns. Recognizing these nuances helps you see beyond just the numbers and understand what drives a company's success or challenges. By mastering these details, you'll be able to evaluate companies more confidently and make smarter choices based on their true financial health.